Hi class, this video is going to run through exercise 9.1, which you'll find on your textbook on page 191 and your workbook page 169. So as per usual, I recommend that you have both open, pause the video as we go, and we do this question together if that is what you wish to do. This question is all about product and period costs. So this question is all about us thinking through what is the cost of our inventory? What is the most appropriate cost for us to allocate to our inventory, which then would flow through all the way through all of our reports and templates such as our inventory cards, general journals, general ledgers, and ultimately our reports are impacted such as the balance sheet and the income statement. So it is a really important part of accounting to think through what is the cost of our inventory. This question has two components. Part A, which is what we're going to focus on, is going to look at three items that Poppleton has purchases. So this Dan Poppleton is the owner of Westside Sports, and there has been three purchases on July 6th, July 14th, and July 22. Our first question is to think about what is the cost price that you would recommend allocating for each of these purchases, and that would ultimately be the cost price that we would allocate into our inventory card. Now this question is going to think about what are the additional costs associated with the purchase, and are they product or period costs? So this is ultimately the question what we're asking. We will have a purchase, but what is the cost of our inventory? And you should remember that the cost of our inventory is not just the purchase price of the inventory, it is the purchase price plus a number of important elements. So it is the purchase price plus all other costs associated to get it into the location and condition ready for sale. So are there other costs associated with this purchase of inventory that would be involved with getting this inventory into the location for our sale and in the condition ready for sale? So this is always going to be the test that we come to. And then we have another test. Is this additional cost a product or period cost? What is this ultimate test? Can we logically allocate the cost to each individual item? Because we might buy 10 items. Can we logically allocate the unit cost of the additional cost to each individual item? So this is our ultimate test. Can we logically allocate the cost to each individual item? And we can kind of think this is a flowchart. If yes, then we have a product cost. And we're going to add that cost to our product. If no, we're going to call it a period cost. It's still an important cost, but we can't allocate it to the individual item. So we're going to record that cost not in our inventory cards, but in the period as an additional expense. So that really is our test. So I'm going to delete that, and now we're going to go through each of these three examples. So let's quickly delete that as quickly as we can. And let's go through these three examples. So on July 6th, we bought 5 bikes for $240 each. The bikes were modified before delivery to put a computerized speedometer on. So we've bought bikes for $240 and we've added a speedometer onto the bikes, which would then presumably tell the rider how fast they are going to ride. Each modification costs $25 per bike. So let's think about the flowchart that we had to think about. What was our purchase price? Our purchase price was $240. Are there any other costs that have been incurred to get it into the condition or location ready for sale? Clearly, we have modified our bikes because we've put a speedometer on. And this is going to be before we sell them, so it's put it into the condition ready for our sale. So we have $25 per bike that is now part of our inventory cost. Now the question is, can we logically allocate the $25 per bike to each individual bike? And that's a really straightforward question. We've been told that the speedometers cost $25 per bike. So the key bit here is the per bike. That means we can logically allocate it because we know how much of this modification is per bike. So it's our inventory cost price is not $240, but $240 plus $25, so it is $265. We have our purchase price, and we have an additional product cost, and product costs are allocated to our inventory cost. So part A, July 6th, we know that our cost price is $265. How would we justify this? We would say something along the lines of it is $265 because we have a purchase price of $240 and we can logically allocate the $25 per bike to add the speedometer, and this gets it into the condition ready for sale. So our answer in our cost price, $265 for our bikes. If we move on to July 14, we have another question. We have purchased, in this case, 2 dozen. So for those who are a bit unsure what that is 24 Sharon footballs at a cost of $70 each. The courier that delivered the footballs charged a delivery fee of $12. So, what was the purchase price per football? Clearly, that was $70. So we know to start off with our purchase price was $70. Now we have to think about, is there any other cost to get the footballs into the condition or location ready for sale? Have we modified the footballs? No. So the modification, the condition ready for sale hasn't changed. But we were charged a delivery fee. And this is important in terms of getting the footballs into the location ready for sale. So we do have $12 that we need to think about. Can we logically allocate the $12? This then becomes, so the theory is, or the question is actually saying, we have bought 24 footballs and it's cost us $12 to deliver them. Can we allocate the $12 to each individual football? And there is a logic that says that we can. It cost us $12 for 24 footballs. So theoretically, we can logically allocate 50 cents to each football. So really our cost price of our footballs is not $70, but $70.50. We can logically allocate the 50 cents, And we will come back to that 50 cents in a second to discuss if that would be something that we would allocate. But right now, we can say that the cost price of our July 14 purchase is $70.50. On July 22, we received a delivery of 12 soccer balls. These balls usually cost $38, but have been repackaged in special boxes featuring the flags of the nations that compete in the World Cup. And this was done as a marketing strategy, and it cost $4 per ball to do. So let's run through this one relatively quickly. Our purchase price is $38. Now, with this $4 per ball, is this impacting the condition or location of our sale of our balls? And it clearly is. We've changed the condition of the balls before we sell them to take advantage of the World Cup. So we can logically allocate that $4 to each soccer ball again. It is making the balls slightly different, so we're changing the condition for their sale. So we can say that the cost price of our soccer balls is $42. We can logically allocate it because there is that key word here, per ball, that tells us enough information that we can logically allocate it. So if we are thinking about the cost price of each of these items, we would say that the bikes are $265, the footballs are $70.50, and our soccer balls are $42. All of this has occurred because there has been, and we'll write this out because you do have to justify it, you would talk something about this. There have been additional costs to get the inventory into the condition. So for example, the speedometers and the packaging and location. And this is where we're talking about the delivery charge of the footballs, ready for sale. So that would be your justification. The one final thing I would ask you guys, and this is an important part about a period cost, we have to think about for our footballs, do we think this 50 cents is relevant for decision making? There is one final part of product costs. You don't have to allocate the additional cost as a product cost if you don't think it is relevant for the decision making. So I've missed a word here, relevant for decision making. If you make the decision that the 50 cents here is not going to be relevant for decision making because it's less than 1% of the cost price, you might then say, no, it is not worth this to amend our cost price and amend our inventory cards. You might say that this $12 of delivery is a period cost and would be an extra expense in your income statement. If you're saying that, that is perfectly valid, but you would need to explain why the 50 cents is not relevant for decision making. That is your final test. Hopefully that has made it clear how you would work out a product or period cost. Part B asks you to explain the difference, and that would be then you would go back to your definitions and talk about how product costs are costs that can be logically allocated and period costs cannot be logically allocated and or may not be relevant to decision making. And you have some examples where you could talk about here. You might talk about the Sharon footballs as potentially a period cost, the $12 of delivery, because it's not relevant. And then July 6th and July 22, you have clear examples where there is a relevant cost that can be logically allocated, so that would be a product cost. Well done, guys, for completing this activity, and we will continue our work doing textbook exercises and also some additional worked examples.